So I thought of a way of explaining Nifty Payroll that I think will make a lot of sense for some people. Let me change that. So one way to understand Nifty Payroll is to recognize that fundamentally you only have these two apps. You can actually use these two apps to do your payroll in full, right? You can put all your salary information in just these two apps and it will be sufficient to generate your payroll. So let me explain what I mean. So these items, right? So what we are calling items come from here. So items, if we go with this view that is section view, is basically all these things that go into the payslip. So you have cash. Cash 1 is just normal salary, cash 2 is lump sum, then you have benefit 1, which is all those benefits, and then you have car benefit, etc. So there's all these things up to voluntary deductions down here. So those things can all be input for individuals using these two apps, fixed items and varying items. The difference between these two things is that on fixed items, if I go to here, on fixed items, what you have is this month from month to, okay? So let me do that again. This month from and month to. Okay, so fixed items gives you a range of months for the applicability of an amount using an item for an individual. So this Andrew Abdul guy, his basic pay between 2024 October and 2025 June is $1 million. And then same guy, same basic pay, because this ended in June, from July up to no end meaning we don't know when it's going to end, his salary is that. So that's how fixed items works. It's about a range of months. Varying items is about a single month. Just a single month. You come here, this column, right? In this case, we are looking at September 2025. If you go to another month, you will have different things. The thing about varying items is it captures anything that changes every month or only happens occasionally. You know, from one month it might happen in January, then again it happens in September. So it's not something that remains the same over 2 or more months. So for example, let's see what I have here. Okay, those are not good examples. This is a good example here. Bonus. A bonus is done, you know, just once in a while. So it would go into varying. You wouldn't put it, if you put it here, it would work, but you would have to say 2025 September to 2025 September, which is inefficient, which is why I separated the two kinds of things. It also just helps you to be able to separate in your mind what happens in each item. Now let's look at this phone bill. This phone bill, assuming this Andrew Abdul guy uses his phone and then the bill is posted into the system and then the benefit is calculated. The bill will change from month to month. So maybe last month he had 3,000, the other month he had 2,500, and this month he has 2,000. You would use these varying items instead of the fixed items because the amount is changing from month to month. Now, all the items you have can be captured in those two things. Then when you come here and you process like that, it's going to bring all the items from varying and from fixed, which is what we see here, and then it's going to do all the calculations that are required for a payslip. Now, so what is all the rest? Let's go there and take a look. So let me do this again. What are all these other things? All these other things. Let me explain. So let me escape. Now, computed items, this one, is just a tool. All of them actually are just tools. All these are tools, including all these, are tools that will help you to process specific kinds of items more efficiently than having to do, say, calculations in Excel and then bring in the actual amounts, which is what you would do in the fixed and the varying, right? So let's look at each one. If we look at computed, I'm just going to explain. If, for example, you want to calculate housing as a percentage of basic pay, so that whenever you change the basic pay, the housing changes appropriately, you can use this tool called computed items. You can set a formula that says housing should be 15% of basic pay. That's what this tool does. What's the next tool there? The next tool here is pay per unit. What does pay per unit do? Pay per unit, really, the per unit refers to hours and days. If you're calculating overtime, usually it's based on hours. If you're calculating, say, leave that you need to pay, it's based on days. If you're calculating wages using a daily rate, again, it's based on days. So you have two apps here. You have this PPU rates, and you have this pay per unit. So the pay per unit is where you put in the actual number of days, number of hours per individual, and you say what it is that is being paid. Is it overtime? Is it leave? Is it wages? That's what you would put here. But the rates are calculated using this other one here, this PPU rates. So this PPU rates lets you put in a formula of how you calculate your daily and your hourly rates. It calculates them for you, usually based on data that comes from the fixed items, which is your basic pay and anything else that's fixed, although you have an option to use just basic pay. So this generates now the daily and hourly rates, and can be changed at any time without affecting the data that's sitting here. So that PPU, this pay per unit, relies on the rates that you have put in. This is useful because once you decide how you're going to calculate your daily and hourly rates, you have a formula. So every time, even if you add somebody new, you should be able to add them into the schedule easily. And that's what PPU rates lets you do. And then you use those rates to calculate pay per unit. Okay, the other one is self-explanatory. SACCO, you have a fixed version and a varying version. The fixed version is if you know that this person is contributing to SACCO a fixed amount for several months, you can post it here. And you can have a combination. Somebody can be here and can also be here. Maybe their loan repayment keeps changing every month. The other thing is sometimes in some companies, the SACCO sends you a schedule of what to deduct. It's just easier, instead of trying to see what is fixed and what's not, to just use the varying version. That's why SACCO has two things. Now the reason I did SACCO is because SACCO can become complicated. In some cases, you actually have many SACCOs that are being used for the organization, and each SACCO needs to get its own report. So these two just enable you to manage SACCOs very easily. Now this next one, which is payments and advances, is if you normally pay advances to your employees, especially if you pay more than once in a month. Let's say you pay at the end of, there's a company I used to do payroll for, they would pay people every Friday. So you need to be able to keep track of that. That's what the value of this app here. You can see these are just tools. To achieve the same thing you could achieve here, but now there are tools to help you to capture the data easily. So that explains these. These are the pay, I call them pay and deduction apps. So they are used to capture both salary information and voluntary deductions, right? Those are the main ones, and all the rest here, let's say, these are tools to help you to achieve the same effect that you would be able to achieve here. This is where you input your salary information. The other thing that affects, or can be used to input data is these ones here. I call them tax and accrual apps. These are the tax ones, right? So this is things that are sensitive to how they are handled for taxation. And then these are accrual. Let's call all of the three of them as accrual apps. So these are the accrual apps. So accrual simply means I want to keep track of the loan repayments that I have given, someone has committed to. So this tool lets you do that. So you could put the same information here and say between this month and this month, I want to put a loan repayment of X amount. But in this tool, you can say when the loan was given, you can calculate interest, and you can set the repayments and adjust the repayments. That's what this tool does. It's helping you manage loans specifically. Leave also. People need to keep track of leave. Leave can be a real tedious thing if you don't have a way of keeping track of it. What has somebody earned in leave? What has somebody used of their leave? Etc. So that's what this tool does, the leave one. Then lump sum is a tool for calculating severance pay at the end. Maybe you've terminated somebody and or they are retiring, and you need to calculate their lump sum payment based on the calculation guidance of KRA. You can use this to help you to capture that calculation. So that's those three down here. Those are the accrual apps. Then if we talk about the tax apps, which is these ones are also pretty self-explanatory. So if somebody has a car benefit, there's a way car benefit is handled. So you would come and put that person here with the car details, etc. Now before we did the simplified P10 return in 2025, you needed to input car details into the P10 when making the return. It's no longer required, but this enabled you to generate that schedule. Other benefits includes electricity, water, servants, furniture. These are some old benefits, historical benefits that used to be given using a specific rate. So this tool is there to capture that. Those rates are still applicable even though they are minuscule, but that captures that. You can also capture phone benefits here, but there is a better way to do that. House benefit refers to, are you housing this employee? In the KRA P10 that you used to do the return every month, you have to say whether the person is housed or not. So in most cases, you have benefit not given. So that's where you would generate this. Now, if you are housing somebody, there is a way to calculate the house benefit. It's 15% of salary, or if the rent is higher or the market rent is higher, you take the highest, right? So this tool lets you do that calculation. I'm not sure I said the calculation right, but this tool is based on that calculation. Then you have pension. Pension is complicated. You have to deduct it from taxable pay up to a limit. There is a portion that is contributed by the organization. People want to be able to see how much pension they have saved, so there's a way that you can capture brought forward balances. So this tool helps you do all that, right? If you try and do that directly here, you can do it if you know what you're doing, but it's again tedious. Like I said, these are just tools to make your life easier. So everything can be captured here, but use the tools to help you. Home relief includes mortgage interest relief, and then we also have this affordable housing contributions relief. It's hardly used. I haven't seen any of my clients use it yet, but I've put it in there. So that manages that. It tells you, or it gives you a way to put in the amount and helps you to calculate what should be used to reduce taxable pay up to what limit. And then you have insurance relief. There are certain insurances that are, what can I say, they are eligible for relief to reduce your taxable pay again. No, this one actually reduces PAYE. So this one acts like personal relief. It comes after the PAYE calculation. So this is life insurance. What other kind? I'm not sure whether education insurance is included, but it probably is. There are various insurances that if you're paying them, you can take 15% of the premium and use that to reduce your PAYE. So this is where you would capture that, and even that is up to a limit. So again, it's a tool to help you do the calculation and observe the limit. So like I said, if we come back to what I was trying to explain from the beginning, let's take that. I was trying to say that, let's see, red. I was trying to say that when you want to generate your payslips, and the payslips are what enable you to generate all the reports you need for all the stakeholders of the payroll. Where you put in your salary information is here and here. All these are tools to help you to handle different types of salary input. Your main ones are these two. You could actually use these two to capture everything. You could actually use this alone, or you could use this alone. But when they work together, they are more efficient. And when you use these other tools as well, it makes it even more efficient. So that's what Nifty Payroll is. These others have to do with other things. If you just understand that you're inputting your salary information through these, you're good to go. You put your employees in, you put your organization data in. This happens very rarely. You do this at the beginning. You do this only when there are new people, when you're starting. These are statutory rates where you put in the tables and rates that are used to calculate various things. That only changes from time to time. Your items are what are used to capture the data from each of these apps, right? These are just labels for what goes into the payslip. And that's it. That's your payroll right there. These others here, this here, data in and data out. You can email payslips out. That's what I mean by data out. You can import data from Excel, and then you can import also from Excel in a different way. And then you have these administrative apps just for maintaining the system, backing up, compacting. This is something to do with access specifically. These are just things that are used for administrative purposes. So really, the payroll is limited to understanding this and this. Those are your main things. Once you understand those, you're set.